Hello, 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 everybody. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacino, who's not here today. But Bob will be back tomorrow to discuss the FOMC. Just as Wavy put up, FMOC 2:30 Eastern Standard Time. Who cites that? It's everything's based off of Central, Wavy. Come on, I'm in Central Time. And you know it all revolves around Chicago and me. Just kidding. So yeah, Powell is speaking. Yep, we'll get the announcement. I think it's going to not be a lot of surprises. It'll just get things out of the way. I don't think they're going to do anything to shake the markets even more than they're already shaken. But we shall see. Let's see who else is here. Kalani, happy turnaround Tuesday. Well, it was sort of a turnaround Tuesday. It was turnaround from this morning. By the way, before I forget, key thing, and I might mention this more than once, is especially when Europe is down, selling our markets from their open, watch when Europe closes. I really start paying attention to 11 to 12 a.m. Central Time because it frees up the selling pressure. I did put that in Discord today. But keep an eye, as long as we have the selling, European selling, watch for turnarounds at least after they close. If it does not turn around after they close, it means there is a lot, and I repeat, a lot of weakness. Hello, Wavy. We already put up your comments, so we knew you were here. Yeah, we'll take a look. Microsoft small beat, but massive sell-off in the after hours, and look right here. After hours, Microsoft. Does anybody have the Tech TI results, Texas Instruments? Haven't had a chance. I did see Microsoft beat, and then I glanced at the charts quickly, and that is getting sold off, which is starting to look. We've started to talk about even yesterday with Bob. There's a lot of similarities between 2000 and now we're getting. Microsoft did have a pretty nice beat. The stuff flying around now is. Well, it wasn't as big a beat as expected. It's just, things are starting to get sold, which I'm still watching for this bounce, okay, because I got to play it technically. But when stuff gets sold and still the breadth underlying this market stinks. I've talked about this. I was talking about it in November, December, and the breadth still stinks. Now, what worries me, let me get into something else, is that once we start getting these remember, the S&P is a cap-weighted index. Yeah, you can look it up on equal weight footing, but just one you're looking at all the time with the futures, and the SPX index is a cap-weighted index, which means the bigger the market cap, the more it plays in the price action. All right, so it's not equal weighted. You don't have 500 companies all at the same weight. You have some biggies. Now, most of the stuff is, the breadth is terrible. There's a lot of companies that are getting hammered still and are deep in the bear territory. And even if they get to a point of really good value and they start getting bought up for longer term because they're getting a good value, they're just minor components in the S&P. So once we start getting this, like if the selling follows through with Microsoft tomorrow, we getting selling off with that. We have Apple tomorrow. We have Tesla, all big mega caps. You start getting selling, especially after earnings. That's going to put down a beat down on the S&P. And longer term, because they've been holding up a lot of stuff for a long time. So even if you get a lot of value and funds and other things start scooping up some of these decent value plays in the S&P and even the Nasdaq, as long as the large and mega caps are getting beat up, and those are generally the last ones to leave the party, then we could have, again, multiple waves down on this over time. So just keep that on your radar screen. Just wanted to announce that. Well, I had it on my mind because sometimes I get wrapped up in technical analysis and I forget. Christoph, not sure what to make of this hour sell-off. Is that significant? Again, I'm going to be watching things going into tomorrow. Not making any major decisions tonight or even in the morning. I need to see how things open and react, especially before the announcement tomorrow. So I'm not making any critical decisions on that. And the NAS is selling off after hours because of Microsoft. But I know Microsoft, they have a conference call at 4:30 Eastern. I mean, 5:30 Eastern, 4:30 Central, which this live stream will be over by then, but they're going to give forward guidance, and we're going to have to see now how it reacts to forward guidance. So that's the next big thing. So I would not make any snap decisions. Again, things are overreacting right now to, I'm not saying diminishing, because longer term, I think we're going to take another major leg down in the markets. Whether that happens tomorrow or whether it happens in a few days, fine. I'm only expecting even, and the probabilities only say a short-term bounce at this point. Can the bounce be over? I guess it can be already. We'll take a look at the charts, but we shall see. And again, even stuff I'm doing with Bob, we're long the SPY on the open. I'll talk about something with that too. We're long. There's still plays to be had. You got to play the probabilities. Hello, Shashi. Texas Instruments, thank you. Massive beat. Texas Instruments. Here's our Texas Instruments results from Wavy. Again, I really appreciate all the members who are here to watch this live, to just help with this kind of news and be here to support the channel on a regular basis, because I can't be on top of everything, especially when I'm doing a live stream. Let's see. Texas Instruments tops Q4 EPS by 33 cents, guides higher. All right, so they did guide higher. Q4 earnings per share, $2.27, 33 cents better than analyst estimates. So they really knocked it out, and they guided higher. We'll take a look at them. Revenue quarter came in 4.83 billion versus a consensus estimate of 4.43 billion. So they nice beat on revenue. High PE names, yeah, high PE names getting whacked, and the PE names have a lot of room to get whacked. Value names getting traction, yeah, and still there's a ton of value names that are still overvalued to slightly fairly valued, and things can get undervalued before this thing bottoms. But remember, even if stuff's fairly valued and starts getting scooped up, if it's not a large market cap, it's not going to have that much play in the index right now. So that's, again, ties into my concern. That was the after hours. We'll peek at Microsoft and Texas Instruments. Anybody have the Capital One results too? I'd like to just know where that, or if they said anything. If somebody could do a scan for that at some point. Tomorrow, after we have Apple, but before, I'm keeping an eye on Boeing because of that double bottom that's still in play. We're going to watch AT&T because of communications. Going to check on Nasdaq, of course, just their earnings. And then there's some other things, but that's nothing that's really going to shake up the markets from my perspective. So that's that's really, there's nothing before the markets that are going to really could make or break. Let's put it that way. Boeing will be interesting, but I doubt it will make or break anything tomorrow. Here's your heat map from the close today. You can see Microsoft still down, Apple down, and then Microsoft was down more after hours, which we'll check in. Google down, Amazon down, Facebook red. I don't have the percentage. Netflix down big, following through. Your banks rebounding today. Pfizer and J&J. Nice little healthcare. We have energy still strong. Look at the energy sector right here. CVX, XOM. Remember, I'm still bullish. We've had that nice little pullback on energy, and we had a nice little rotation up today. So just keep that in mind for longer term plays. Check out the sector analysis I did. I'm only going to do that on a weekly basis, and at some point that might be part of the coming subscription, a fairly priced little subscription model to help support the channel. So for some extra videos like that for people who are really interested in learning. Calendar. We had consumer confidence coming in better than expected, but missing the prior, so it was sort of a mixed bag with that. Richmond Fed missing. Let's see. What else? Tomorrow, going to keep an eye on new home sales, crude oil inventories, but the big thing is all the FOMC, the statement. I'm not expecting them to change the Fed funds rate at all. It'll all just be what's the press conference and what's in the statement. So remember that for tomorrow. Let's see. Let's take a look before we get to the, let's take a peek in at Microsoft. You can see Microsoft Post is trading 274, which is actually below, let me get that, the daily chart, which is actually below spike low. So I really want to see if it starts rebounding with the conference call or not. Here's the bigger picture on Microsoft, though. If it really starts tanking down, we've held up. We got a close yesterday. You see just above this prior major open on the weekly. I'm going to be really paying attention to this tomorrow then, because if we start rolling over, it's into an advanced clear path move just because of this little pausing area right here. But Microsoft could trade down to 262 pretty quick, and then if that doesn't provide support, about 247. But it's all going to be this after hours. And you see it is oversold, but as somebody says, market can say oversold and go lower just like it did when it was overbought for months. Exactly. But you still got to trade the probabilities, but don't just count on a bounce or a sell. It's why I love to trail stops. Also, you see here on the daily, if we were to close below about 282 tomorrow, let me put a line on there. Then, especially with that, this is the last little major support path that we spiked below and closed above yesterday. And also we've lost to 200 again on Microsoft. But if we can start getting a close below there, I'm going to watch for an even bigger pullback longer term. Again, there'll be great little buy dips, buy opportunities in these. But overall, that's what we got to keep an eye on. Texas Instruments, you can see that's just, well, they really crushed it. Not a big bounce up, though. I mean, that's only up $4 after hours. $4. Now, they're breaking down, too, so I'm going to be interested. I'm going to watch this again tomorrow morning to see if it starts getting sold. Because if it starts getting sold with that kind of massive beat and good forward guidance, take that into account. When something not only beats, but then forward guidance, because you have a beat. That's why I want to see Microsoft's forward guidance. Because let's say Microsoft beat and they guide way lower during their call. All right, well, now we have even more justification of selling it because, all right, they already beat. We've already got that out of the way, but they're guiding lower. Now, Microsoft guides higher and then doesn't rebound, and Texas already guided higher, Texas Instruments, and had a massive beat. And if that starts selling off tomorrow, you just have some major, major weakness. You start watching little signs like this for major weakness. So here's your Texas on a, remember, it's now got to bearish mode. So even on a rally, even if you're trying to play a little bounce on this, the weekly's gone to bearish mode. We're below a lot of the key moving averages. Next little support area is about this 166. And then below that, I mean, longer term. See, these are the kind of things longer term over the next few months. I could easily see this return to 200-week moving average. And here it is. It already broke a while ago, the 200-day. But this 200-week, I wouldn't be surprised to see it over the next few months if we continue in a very harsh selling environment for Texas to hit 140. That's the kind of thing where things can unravel a lot longer than you think. Now, let's see. Just looking, I'm not going to read all of this. This was like provision. Q4 provision for credit losses upped. That's what I was looking for. And 3 net charge-offs. Yep. If that's, that's implies consumer weakness to me. I'll have to look at this a little more, a little bigger. Wow. Where's Capital One? There we go. COF. There we go. I know you put that in there. I just had a brain fart. COF, yep, post lower. There's some consumer weakness coming in. I mean, overall, this is why I'm very, or for the next bit, bearish on the markets. That does, again, we're positioned for the slight bounce, but if it gets stopped out, then, you know, got to go the other way. We're already shaken. There's only upside. I disagree. There's still a lot of downside. And if we don't get the upside bounce before we get more major downside, the market's really weak. I agree that the odds are for still a continued bounce. That's why we're playing for the bounce, but because of the probabilities. But the probabilities aren't guaranteed. They're probabilities. What else do we have? Bear Mike sounds like he means business. Bear Mike's tired. Bear Mike got really frustrated with people today. And maybe, I don't know whether you'll get the rant this one or in the company that shall not be named, but Bear Mike's really frustrated. And I'm tired then. Can Powell save the market tomorrow? I don't think Powell will say anything to throw more fuel on the fire. Okay, now, if he doesn't, like, do anything, again, they're going to keep unwinding quantitative easing. That's already been baked in it. They're not, I doubt they'll reverse course with that. They're going to rate hike in March. They're not going to probably say how much they're going to rate hike, and it's probably only going to be a quarter point. All right, but it's going to be status quo. If he does give a little, like, you know, hedging for a potential dovish tone, like if there's a slowdown, we might have to reassess how rapidly we increase rates. That might be a dovish bone to throw out there. But if the market then sells off again, it's just, look, we're at that rollover, and you're still going to get those rip your face off rallies in the bear markets, because that's what we already covered that yesterday with Bob, with the similarities to 2000. Like yesterday, rip your face off rally. All right. I mean, look at these rallies, but these are the kind of rallies, and look at the selling pressure now in the Nasdaq. That's just major. Oh, again, I'm not making any snap decisions because things are just overreacting to this point to me based off those Microsoft earnings. But if they continue to go down, you got to trade with the trend, and the bounce then was a dud. And you take, if you're playing the bounce, you take your stops and you move on. You watch for, you know, opportunities for shorting and opportunities to jump at least on short-term trends down. And then if there's good buy signals and stuff, you look for those. What else? I'm getting to think we're having a liquidity shortage with lots of money waiting on the sideline for the Fed. I think there is some money waiting out there to get that out of the way. Just out of the way to make sure there aren't any shocks. But then we'll see. We shall see, won't we? S&P. Let's get some market analysis in here. Here's the S&P. And again, trading back down after hours. But what am I watching for tomorrow? Again, deeply oversold, not making any snap decisions. We're long the SPY, by the way, which leads me to a rant, because even in Discord I put, and I got asked even before the open, what are you doing today? I mentioned to somebody, oh, we're buying the SPY on the open. And they asked, well, where was your stop? And I said, below the 62.5 retracement. You know, I gave, and they're like, so here. So all right, when I give a stop, here's my mini rant. Please use sense with stops. Because they're like, all right, got long in the open, 433.06 area. Here's your 62.5. Do you think I was watching the stop on a 5-minute basis? I said it's a 3 to 5 day trade probably. Okay? I get a message. Stopped out. Like, what? Yeah, it closed below 62.5. I'm like, you got to be kidding me. It was a 5-minute friggin' close. This, you pretty much sold the low of the friggin' day during the market hours. Did I say a 5-minute close? All right. If it's a 5-minute trade, 5-minute close. If it's a 15-minute trade, I have no problem with a 5-minute close or a 15-minute close. A daily trade, you're not trading off a 5-minute close. You daily, here, let me give some rules out to everybody. Kind of rules I use. Daily trade. Aggressive stop would be on a 4-hour close. Regular stop would be on a daily close. Conservative stop would be on a weekly close. A weekly trade. Conservative stop would be on aggressive stop would be on a daily close. A conservative stop would be on a weekly trade. Close. A 4-hour trade. Aggressive would be on a 1-hour close. A standard stop would be on a 4-hour close. And conservative stop, if you wouldn't give more room, would be on a daily close below a level. You don't take a friggin' 5-minute close on a daily trade or even a 4-hour trade. That's absurd. And people, I'm going to go on a rant now because people either are trading way too big or they're afraid of losses. And this is what happens. When you're afraid of losses, you're always trying to, I got to call the bottom. I can't even have something go against me. And I asked them, well, how many did you have on? Because I know roughly their account size is around 100,000. Okay, that's what they're trading with. And they said 900 shares. I'm like, how did you get 900 shares on? Well, they're like, well, I'm approved for day trade, March 4-1. You're trading friggin' your whole account at 400,000 leverage off a daily call, and then you stop out on a 5-minute trade. You shouldn't be trading 400 friggin' shares. Use some sense. Don't risk more than 1% of your account with leverage. All right, and if you're scared because you're over trading your account. You should not be trading that big. You're trying to call lows and selling highs. You're trying to make, it went against me, what? From 130 to 128? And you're making a snap decision on a trade. You're giving it $2 worth of volatility in this kind of environment? Are you frigging insane? Look at these bars. Look at your volatility. And you're trying to call a low by $2 in the spiders? Are you insane, man? And then you're trading your account with 4 times leverage and putting everything into one trade? Don't be an idiot and don't overtrade. And there are people even that are on the Discord server that I know overtrade with the too big for their account size. And stop trying to micromanage the stops. Give stuff room to work. If you're trading scared, you're going to stop yourself out and take too many losses because you're trading with scared money. That's why you trade small, you trade on a risk-adjusted basis, and you use sensible stops. And you don't be afraid to stop out. You accept the loss before you get in the damn trade. Else you don't trade. Especially in this market environment. Look at this bar on the spiders. Look at these recent bars. We have major volatility. And I think this is more important than people to hear than going through some stupid market analysis. Because let's just take a look. Here's your average true range. And this is based off a 14 period. This is a handy little thing to call up. And I'm not going to go into math besides the average true range, but it takes into account gaps and everything. Look at where it is. Look at where we were on these run-ups. This is on dailies. This is a nice little bull market. Little sell-off, it goes up. But look how it's been climbing recently. All right? And then if I make this even shorter term, and people probably drop off this live stream because I'm in a friggin' mood now. But I think this is important. Look at this. Here's your 5-day. Look at this. Here's your ATR. Your ATR is approaching 12 off the last 5 days, and you're trying to have a $2 stop on a daily trade? Are you insane? That's nothing. You have to take into account volatility. And you have to take into account position sizing, risk, and you accept your loss before you get in the trade. And here's one of the challenges I have for people. Because I went on this, I've done this study for a very long time. It's why close is most important. And to start looking at closes and judge your time frames accordingly. I don't have a problem if you're watching a 4-hour close on a daily trade. If you're aggressive, okay. One time frame up and one time frame down, or a daily close, but not a 5-minute close or a 15-minute close. And a lot of people take stops way too soon because they don't wait for the closing price, and they get shaken out because they're not managing the trade right. And if you're scared of the trade, reduce your size. And you should be trading a lot smaller size than you think, and therefore you won't be scared of stops. And more people, if they give their trade a little more room and wait for closes, they're going to be better off. And I've done the own study with my own account when this is how I got to this conclusion, because I used to view stuff on an intra-bar basis, a closing basis. And closes, by waiting for the close, the returns were much, much greater. And if I need to wait for a close, then trade smaller. There you go. That's why we say the close is the most important bar. It's not the intraday price action. And you can have a disaster stop intraday. I'm not telling you if the market's going to go down 2,000 friggin' points not to get out at some point. But that is on a very rare case-by-case basis. You can figure out your disaster stop also before you get in. But I'm not risking $2 on a 3 to 5 day trade in something that the ATR's approaching 12. You're just flushing money down the toilet. You might as well not trade. Sorry. And I hope people, give me the thumbs down. Watch this thing, because I'd rather have thumbs down and at least make you think about something. Especially these, because these are where people need to learn. And you have to learn, if you're bull only, fine, you're going to have more losses when the market's tanking. And you wait for the probabilities, and even if the probabilities are 70% for a reversal, there's 30% of the time it's going to be wrong. You accept the loss before you get in the trade and use a common sense stop and adjust your position size to take into account that stop. Otherwise, sit on your hands or close your account. There you go. So, all right. Welcome. By the way, if you sat through that and you're new here and you didn't leave, please do consider subscribing, ringing the bell, and giving a thumbs up or a thumbs down to the video. Again, thank you for the people who stick with this and truly want to learn. Truly want to learn. That's why I'm not going to even react to this. Okay, look, Nasdaq. The Nasdaq could be back up here. Do I know where it's going to be tomorrow? But no, we could be back up here by tomorrow morning. It could rally based off the conference call that Microsoft has in 30 minutes. Or it could keep selling off, and it doesn't really matter because I know where my stops are. All right, let's see what we're doing for the... I'll take a look at a couple comments, then if anybody's still here. Microsoft guidance not good. They didn't announce it already, did they? I thought it was during the call. Well, these guys don't know about stops, do they? But there's a lot of people who don't know, and they make snap decisions, and people are afraid of losses. And you respect losses, and you manage it, and you're going to have losses. Is what we talked about even yesterday. Or don't use... I think you should... I'm not saying you have to have a stop in the market. Okay? Maybe a disaster stop in the market. But even if you're trading manually, you know where your stops are. You know where they are. And I'm talking stops. I'm not talking about putting stops in the market. I'm telling you, if my stop, I don't care if it's in the market or not, but let's say my stop is on a closing basis, a daily closing basis in the S&P, below 42.93. I know where it is. Do I have to if it's on a closing basis, I'm not putting it in the market because I'm waiting for the frigging close. Or right before the close. So it's not going to sit in the market, but a disaster stop might sit in the market. Like I might have a disaster stop if we break 4,200 before we get to a key close, and we're just have momentum bars and there's halts in the S&P. All right, look, I'm out. Look, we're tanking. We're down, like we're halting the S&P. I don't want it apart to define. That's the disaster stop. But other than that, I'm waiting for my stops, and I can't put a stop that's waiting for the close in the market. Why? Because if it trades below it before the close, and we don't close below it, it can get hit. So it's not just, again, I'm not talking stops in the market. I'm talking know where your stops are and make sure your stops make sense. Period. Well, thank you, Jake. People need to hear this. We like your rants. It reminds me of my college teacher. Mike, how do you feel about using the 14-day help ATR to help using stops? Like, I hate stops that are just based off 2 times the daily ATR. It helps to take into account. What I do like is takes into account the daily or the volatility. What I don't like is you should still base it off of price action of key levels. So I hate the people. I can't say I hate the people. I hate systems that just use blind ATR stops. They at least take into account volatility versus, as I also dislike systems that, all right, I'm just going to have a 20% stop based off of price. Well, okay, there are times that have closer stops, there are times that have farther away stops, which at least your ATR helps you with. But what's the magic about 14-day ATR at 2 times it? What's the magic? Sometimes you should have closer stops. Sometimes you should have farther. And if you're always using position size based off risk-adjusted returns and the amount of risk you're taking, it shouldn't matter because your stop is where your trade's proven wrong. Now, if you have a great system you've tested out and used ATR stops and you can't find anything better, then fantastic. But just blindly saying I'm using a 2 ATR, that's like saying I'm using a 12% stop. It's not taking into account price action. At least ATRs take into account volatility, which I will give them 1 up over just blind percentage or just blind. I'm risking $2 or 2 points, which even stupider. Mike rants are fun, just nuts. I'm actually pretty far away from the microphone. I moved it back. I moved the microphone back. Wow, I needed to hear this. Well, I wasn't picking on you, Wavy. I didn't. And Josh is laughing. Oh boy, we'll eventually get to some market analysis. I needed to hear as well. Thanks for the capital preservation is crucial. And don't overtrade your account, please. We'll always be here, Mike, as I'm watching the viewer count dwindle. The rant segment should be part of an introduction to trading series. Well, somebody, why don't you watch the replay and record it and then send it to me? Thank you, Shashi. $5 super chat for reminding me my teacher. Well, I hope your teacher taught you something valuable. But when the market can a candlestick hit your stop and you get wrecked, yeah. But also, if you're position sizing, Rich, look, the bigger my stop, the smaller my position. Why do you think that is? Because if it gets stopped out, I'm still close to what I was risking. Let's say my risk per trade is $2,000. How do you think I judge my risk per trade? I know where my stop is, approximately on a closing basis. Well, I know what the price is. It can vary a bit because it can stop below that level, so I give it a little room. But if I'm $2,000, let's say I get in a stock, it's $100. My entry. And I know my stop has to be at 90. I have a $10 stop. If I'm willing to risk $2,000 on the trade, I can trade roughly 200 shares. Why? Because it closes at 90 or let's just say it closes at 90. I'm wrong. I lost 2,000. Now, if my stop had to be an $80, my risk per trade for this trade is now $20 per share. Do you think I'm trading the same size? No, I'm trading half as much. Why? Because if I'm stopped out on that trade, I'm still losing the same amount. My stop got farther away, but my risk did not go up because my position size went down. Does that make sense? And if you want to do it on a closing basis and have a disaster stop, then judge your risk percentage based off your disaster stop level. Okay? So always trade your risk adjusted size based off your disaster stop and not necessarily your closing stop, because you'll still have the same kind of, I'm adjusting my size to where my disaster stop is. So your losses should be, when you get stopped out at your disaster stop, they should be approximately the same. Now, yes, you can have things in fast markets. You can have things go through your stop and not get the fill you expected. You can have a gap beyond that, but that's more a one-off. Just as like you can have targets. Look, I have targets sometimes, and it gaps above my target, so I actually make more. Just as I can have a stop, a gap below my stop, I could lose a little more. But on a risk-adjusted position sizing basis, I roughly know where my risk is per trade. Bigger stop, smaller size. Smaller stop, bigger size. Well, let's see. Yep, just using it to make sure the stop is in the ballpark. Yeah, I prefer to use TP when the market is volatile, not stop. TP. Maybe I'm missing something. Jake, thank you. Yes, please share this with people. I'm no market expert, but every day I come in and I learn something new. Well, thank you. If you are a novice trader and don't watch PTP or Behind the Curve, you know what, and you'll get my rants, and I'm not trying to offend or hurt anybody's feelings. I'm just trying to make sure people don't. There's lots of mistakes that can be made in trading, and I just get frustrated. Sometimes I just want to pack up the YouTube channel, pack up everything, and I'll go back to just doing my own thing. But if I can help one person, I guess it's worth it. All right, tomorrow, let's get through some of this. Bullish line, the bullish line I'm watching, I need to get above to get really intraday bullish about 4,400. We'll just go with 4,400. Still the same. I'm still watching the same harmonics as before. My key area for this rebound move is still a daily close, 42.93 area for the S&P. Nothing's really changed. Even with this after-hour price action, nothing's changed. If you want a disaster stop, I'd have it below 42.12. I'd actually put it below 4,200 at this point, based off a disaster stop, to tie in what I was talking about. Let's just take a look at the bigger picture. See, again, today, this is how it's burning off its condition, though. You see no stop below the 62.5. That's how it's been tested. It was tested on a closing basis. You can see here running up to the other side of the rotation zone. Now, this has softened it. If it can get a rally on tomorrow, there's still probabilities for more upside price action. Even with this after hours date itself with Microsoft and everything else going on. So it's already softened that. Does that mean it has to go up? No, it already rotated down with the 4-hour rotation zone, but guess what I'll be watching intraday tomorrow? It's already softened once. The 1-hour rotation zone is pretty much flat, so you got to watch the 4-hour rotation zone, which is technically in bearish mode. That's why this is aggressive, and the daily rotation zone's in bearish mode. Does that mean you can't have rallies? No. But your rallies, again, I'm aggressively moving up my stop when it makes sense. Okay, because why? Because even on a 3 to 5 day bounce, we get into the rotation zone, we get up to prior areas in here, it could roll over again and probably will. But if you get out of half your position and then you get your stop to break even and then keep raising that break even stop, you can ride this up, and if it rolls over, you get stopped out in the remaining position, hopefully at another profit. So your daily rotation zone is about 44.70. The key area I'm watching, if we do get continued rallies above there, is about 45.10. All right. Keep in mind also your weeklies, and these are the kind of conditions. Look at this. Your weekly could be crossing this week, even with this. So even on a rally, we could get into full-time bearish mode. Does that mean you're going to tank tomorrow? No, it means I'm going to be watching for rallies to get sold. That's what it means. It keeps you in a bigger market context. That's why we use the rotation zone concept. And check on your weeklies daily at this point. Doesn't mean you're going to make snap decisions based off the weeklies, but it means you got to remind yourself of where things are. Nasdaq, here was your sell. I was above here before. We got the sell-off with, now it's closed, for that window when they sort of reset everything daily. Watch where it reopens. Again, daily line in the sand. Let me switch my thing. Bullish line in the sand for tomorrow. I'm coming around 13. We'll just go about 14, 14.4. 14.4. Okay. You can see 1 hour flat, 4 hour. Watch this. The key area, if it does rally tomorrow, I'm watching on the 4 hour right now. It sits at about 14,475. That's going to come down a bit, but it'll probably come, unless we get a rip your face off rally, it'll probably come in contact more with the bullish line in the sand. So that's going to be a really key area to watch. Again, my daily stop level would still be 62.5 based off a close. Disaster stop would be below 13,700, and I would give it a little room below 13,700. Again, daily in bearish mode, your daily is 14,760 on a rally. This has a lot of overhead resistance even before there, so even to get a rally to 14,580, Nasdaq again is the weakest of the bunch. So that's the last one I'm bullish on right now. I'm more bullish on the S&P500 and Dow, and especially the Dow. I got to update these levels too. You see where that key harmonic was, which I didn't update yesterday, but here it is. There's our key harmonics still. So your key harmonics, your major level, if it tanks below 13,706, your major next level is 13,300. And if you want the minor levels, here's what you should use. From this is the most recent swing from the highs on the 12th of January to these lows. So that would give me a window if we continue to sell off about 13,418 to major 13,323. There's your Nasdaq. Here's your Dow. Again, you could just see on the percentage basis, the Dow was off under 1% versus the S&P down 2.21 and the Nasdaq down nearly 4. Let me move these levels. Didn't adjust them yesterday because we had Bob on there, and I adjusted them on my trading platform, but not on here. Dow, 1 hour, and you can see here this 1 hour from before is still holding. 34,456 is still my bullish line in the sand. Dow holding up the best. So on intraday plays, I will be really looking at the Dow. Again, if the Nasdaq is continued to be the weakest, it's because the Dow is not cap weighted, and the Dow has some more stable, bigger names in it, and is generally viewed as a rotation to a little more safety. 4 hour on the Dow, you see spiking through, but then closing back below. But the 4 hour, pay attention to about 34,300 tomorrow. Could give you a nice little play to the upside. By the way, if you want minor targets, here's what I would use. The lows from yesterday on your harmonic projections. Look at that. And look at that. You got to love this stuff. So we got 36,452 to about 34,652, sorry, to 34,700. Then we have the 50 declining EMA on the 4 hour basis coming in right at the next harmonic, 34,832. Here's how that looks like in the daily. This is the cluster I would not ignore. Significant level right there, declining daily rotation zone. That's what I'm keying off of. All right. And again, all these, they're still oversold, but as pointed out, things can remain oversold just as they can remain overbought. Russell, we're going to look at it because I don't have a little tag for Russell because I don't look at it every day. But surprising enough, this Russell price action, yeah, it was off 2.15%, but Russell can be even more volatile, and the Russell was holding up pretty well on this basis today. Yes, we went down, but it's still holding up. The key line in the sand for a closing basis is about 1967.50, 1967. That's where it is. You can see here hitting the other side of the 4-hour rotation zone. So pay attention, especially on a 4-hour close. For the first 4-hour window tomorrow, pay attention to where that closes. Here's your daily, still against that, but the key area I'm watching on is about this 2061, 2062 area. If we do get through that, not just tomorrow, the major prior support that was broken with the declining rotation zone 2126. All right. Let's see. Don't leave us now. You just got to let me vent sometimes, guys. And girls. And everyone. I just use guys as a euphemism. I mean everyone. I'm bullish on the VIX. I'm not. I mean, we can... VIX is still in the nosebleed territory up here. We still have that double. I'm actually bearish on the VIX. I'm actually think it will come down, especially once the Fed stuff's out of the way. You can see here with this double top. And it's pausing at the first target. I'm still watching it to get back down to 27. I would not be surprised to see it hit 27 tomorrow. By the way, crude here. Crude rotation back up on the daily. You can see here after coming down, we had that little double top pattern, completing the double top, coming back down into the daily rotation zone. So first sign of rotation, if it does drop more, this is a partial add. A bigger drop would be a full add. So this is where I like to trade around a core position, and you leave a little room because it did have a substantial run up. But even if we have a bigger thing, it would just be half position for me, coming into a, with the daily rotation back up, and then a full position on a weekly rotation back up. Because that way you're not missing out on a move should it just power higher. But if it comes back to this bigger little thing, because we are still in overbought condition on a weekly basis, you get to have you get to round out your position. Gold actually acting nicely, key against this key harmonic still. So it's going to be very interesting tomorrow afternoon to see what gold does. I'm not super bullish on gold now. We're sitting at this harmonic and the significant level. Your next ones are on a continued rally. The next major area I'm watching is about 1877 to about 1881, which is right near this most prior major swing high. I'm just going through a bunch of markets for my own good too. Silver, watching to see if the actually bump up this level just a bit. I'm watching the 2340s to hold. Important treasuries. This is going to be key. You should be watching the treasuries tomorrow also. Treasuries still against the rotation zone. The only way I'll start watching for a even bigger pullback is if we get a close above 128.25, trying to rotate back down. But again, everything's holding with that going into Powell and the FOMC tomorrow. I see comments scrolling by. I have not had a chance to look at them yet. If we did have the bigger continued pullback based off of Powell doesn't freak the markets out tomorrow, I'm watching more of this weekly area to about 129.6 to about 129.16. Dollar index back into this congestion area, coming back down, holding the weekly rotation zone. So this is now key to me. Again, a close on a weekly basis below about 94.95 area would be a shift in dollar stance to me. Let's see. Christoph, NAS, let me get back through stuff. NAS could trigger a 4-hour double bottom. Yes, it could. NAS could completely trigger a 4-hour double bottom, which is something to watch for. Thank you for, I should have mentioned this. By the way, this is a great time. Now, if this makes a low tomorrow, a lower low after hours, you're going to have to drag this down. I'm putting on conservative targets for the mere fact that you should use conservative targets with this. Why? Because we're against all these rotation zones. Let's see where that, and that would be on a closing basis above, what's the high here? 14,524.75. So essentially 14,525 on a closing basis. And that would still be, even if that 4-hour triggered and completed, it would still only be within the daily rotation zone. And that's a nice little point. I really appreciate you pointing that out to me, Christoph. Thank you. That is a potential play tomorrow. So watch for that. You also don't have one yet in the S&P, does not qualify, and the Dow I know doesn't qualify. So the only double. Now the S&P, if it makes a push lower, might qualify, and if it does, I'll put that in Discord. Thank you again, Christoph. Really appreciate you being here. Do you teach move up your stop to a specific level, etc., after the first double target is hit? Yes, and that will be coming out. And again, I teach an area to move it up to, not an exact, because again, I will fine tune it based off the price action that's happening. But I have a specific harmonic level I'm looking to move it above. Got into a very small options position on rig today. What do you think of it short term? Let's glance at rig. Again, can't give trading advice. Rig, even with oil, I'd be watching for a potential bottoming here. It had a daily buy reversal signal here. Key is I'd definitely be moving up your stop at this 200 flat, 360. So on a buy pattern like this, the stop would be below on a closing basis, yesterday's low. Moving up stop and taking partial profits could be around this 200. Why? Because if it bounces off there and heads lower, you've locked something in. And then it goes through there. Here's the targets I'd use. Again, two things. Let's put up the retracements, and I do the retracements from that key low. Also, if you needed a slightly more aggressive stop other than this low, I just use the 62.5%. You see it gap down on the open, and that would be on a closing basis, though. If you needed a stop in front of this low, 62.5% on a closing basis, and then from a next target up. See how boring this is, everyone, but we have our system down. We put up the harmonics. 374. Look where that falls. I mean, you can trade with very simple tools like this. That's why it's so great, and they work. Little resistance area right here. You can see support area, resistance area. This, I didn't just draw this as a significant level. It's probably close. There's your significant level right there. I can tell you already. So my next moving up stop and or again taking partial profits would be 374 to 377 and then 387. If it gets on a tear, that could also be moving up a stop. Where I'd really look to try to, if it kept running strong, and these would definitely be areas to move up your stops and take, again, you can always take half of your half off again. But do not ignore this 410 area because it's going to struggle to get through there, even if oil stays very, very bullish. What do I think short term? I think it triggered a reversal buy pattern here. I think it's a good potential play. You have some probabilities in your favor. And, you know, you got to keep raising up your stop, especially in these market conditions, because anything can get hammered and sold. Kalani, Mike, this was awesome. We need real talk in this biz. We're playing with real money. Yes, and you're going to get real talk from me. And you're not going to get me blowing smoke up your behind. Because I would rather have people stop watching the channel than tell people what they want to hear or tell people, you know, a bunch of crap to get more viewership. Are you still bearish in Bitcoin? I put out, I said on Bitcoin, I actually was watching for short-term bottoms. I was watching for short-term bottoms. My major line in the sand is of this 30. I have my harmonics down here. Go watch the video I put on. It still holds. The double's off the table, but it still holds. my key area is this 31,700 area. We start getting close below that, I'm going to watch for a rout to potentially happen in there. Short term, it was overdone. I'm still watching for a slight bounce and then another rollover. So long term, I'm still bearish. Short term at this point with this price action is still neutral. If we can get the broad market rally going, I think Bitcoin's going to rally with it. So again, short term, I'm still leaning neutral to bullish and then a major rollover play again. Same with Ethereum. Let's see how nicely it bounced off that harmonic. Ethereum, a little more room. If we start getting close below 1900, then I'm shifting to even more bearish on Ethereum. But again, slight bullish. Slight bullish. Which means, and these are trades only, because my whole viewpoint, and we've been bearish for a long time, just watching for a bounce here, but until we get this garbage with the stable coins out of the way, with printing unbacked coins that are supposed to be backed, crypto's the Wild West of this crap, and I can't wait for them to blow sky high. And that's going to be a benefit if we get when we get a continued sell-off of the market at some point. And especially with this crap-backed Chinese paper that a lot of these things have been backed with, which isn't worth the pennies on the dollar, and then they blow, it's going to flush out a lot of this garbage from the crypto market and at least get some, the cryptos will still be the Wild West of trading, and we don't need 1,800 friggin' stable coins. Or we don't need 1,800 just, I'm going to do a coin based off of poo. We don't need that. Let's clean up the crypto market, but it's still, oh boy. Can history repeat itself when we see Bitcoin at 10? I think we could see Bitcoin below that again. My next target is 20. My next major target is 20K, and then I'll reevaluate there. But I could definitely see if we get the flush out with a complete flush out with stable coins and the unraveling of Tether, I think we could even drop below 10. Longer term. Please, BITI. Then I got to wrap this up. Could somebody put in a Discord that Tesla's going to be a couple minutes late? Because I went on a rant. Inverse Bitcoin. Yeah, I mean, this is just, again, this is inverse Bitcoin. I'd be watching for pullbacks and then moves higher. That's it. You're just essentially trading the inverse. So if I'm bullish on this, I'm bearish on Bitcoin, and it trades the same. Watch especially on pullbacks if you get the weekly rotation zone. It hasn't been trading that long, but the weekly rotation zone's right there. Your daily rotation zone is slightly higher, but 1468 would be a very, yeah. Look, that's right up. Look at this, 1468 with your weekly rotation zone, and here's the bottom with the daily rotation zone. That's your key line in the sand right there. That's a good point. Three-letter of crypto is cry, and I think a lot of people will cry. Yep. Thank you, Sterling. Thank you. Every little bit, this really, again, you can see I got a green screen. I got to get some more lighting. So I'm sitting in the dark right now because my lighting is so crappy I got my blinds closed. I'm literally sitting in the dark, and all the lighting's coming from monitors. That's how sad it is. So that's going towards lighting, Sterling. I just updated Discord. Thank you, Ken. Thank you, Shashi. I'm going to wrap this up now. Again, trade safely. Know where your stops are. They don't have to be in the market. Know where your stops are and manage your risk and your size of trading based off the risk you're taking. And please, if you want to hear this again, rewatch it. Even record part of it and play it back to yourself. Don't do it before you go to sleep. No, I might keep you up and you'll have Mike nightmares. You don't want Mike nightmares. Again, thank you, Shashi. Thank you, Ken. Thank you, Wavy. Thank you, everybody. Arm blown off. NVIDIA to floor. NVIDIA to floor. NVIDIA is trading down, but oops, I didn't take off that. Double that never triggered. NVIDIA is at a really interesting point. 200 SMA. Trying to put some bottom, but a lot of people are going to be trying to bottom feed off this. And besides a slight rally, that's where be very careful with some of these plays. Manage your stops. Bye for now.